First, I will introduce myself. My name is Kevin Mullen. This is Ward Mullen, co-owner of Mullen & Associates, and we're going to just be going over some of the resources that you have available to you through the federal government, through the CARES Act that was recently passed. Before we do that, we jump into just a little bit of about our company. Having already seen this slide, I'm not going to go super in depth, but I'll just give you a little bit of pieces here. We believe that there are two aspects to running your company. One is sustaining your company through your finances, and one is actually growing your company through financial strategies. At Mullen Associates, we tackle both of those. What we're going to be talking about today really covers the growing part as opposed to just the sustaining part, even though we're all just a little bit worried about sustaining our company during this economic difficulty in this time frame that we're in right now. Next slide, please. Thank you. So obviously, as I mentioned, the CARES Act was passed on March the 27th of 2020. So we're just diving into this. I've had an opportunity to read a large portion of the bill. I know Ward has as well, and we're still trying to discern things. It's changing every day. But we are going to include a couple of resources for you within the PowerPoint. If you want a copy of the PowerPoint, please leave us your email, and we can send everything to you directly. If you signed in through this webinar with the correct email address, then we have that. But just ask us, and we're happy to send you a copy of it. So here are a couple of slides, or just some information. The bill really is more encompassing than just what we're talking about today. But mostly what we're going to be talking about today affects business owners and what kind of capital you may have access to. So these are just some numbers that you may be interested in on the back end. Going over the agenda today, I will be tackling the Paycheck Protection Program. I'll discuss what it covers and who it applies to and how it can impact your company. And then I will pass the ball over to Ward, and he will handle discussing the economic injury disaster loans. He's also going to talk to you about the difference between the two and where one might benefit you over the other. Beyond that, I will discuss the stimulus checks, because while you are business owners, you are also taxpayers, and so you may have some cash coming to you from the federal government for you personally. And then lastly, we will handle a Q&A, which means please ask your questions. It's not going to be dynamic where we get into it right away, but at the tail end, we will make sure and answer as many questions as we can.
Obviously, your questions are the most important thing, because we need to know what you don't follow or what you need more specifics on. So please don't hesitate to get back with us on any questions you have.
Okay, so let's dive into the Paycheck Protection Program and talk about what it is. The Paycheck Protection Program has $349 billion of funding from the federal government. The purpose of this funding is to make sure that small businesses can pay their employees. It's the whole point, so that you can pay your employees. We'll get into some of the limitations and that kind of stuff, but that's the purpose of the Paycheck Protection Program. Beyond that, who qualifies for the Paycheck Protection Program are really small businesses with fewer than 500 employees. And for you independent contractors and self-employed folks, you also will qualify to an extent. There are some limitations. We'll go over those too, but this really does apply not just to businesses with employees, but even people who are independent contractors. They work as well. I know we've got a couple of those potentially in our group today. As far as what it covers, this is a little more in depth. So the bill specifically states that it covers payroll costs. It then goes into explain in very legalese terms, what are payroll costs? So for our purposes, we'll define those as salary, wages, commissions, and tips. But it also then covers more of what I call compensation as a whole, such as employee benefits, like vacation and family and sick leave, and employer contributions for health insurance, and those sorts of things that really are included in your compensation. It includes state and local taxes that companies pay on their employees' behalf that are assessed on compensation specifically. And it also really covers the self-employed and independent contractors. So in this case, the wages and commissions and other income for independent contractors, as well as net earnings. Now, I don't have a perfect definition of what they mean by net earnings. We actually called the SBA and asked for a definition, and they have not been forthcoming as far as whether that means your income before your cost of goods sold or after your cost of goods sold or after all of your expenses. This is really net profit. And so we're continuously digging into that. As I mentioned, this is really something that's changing every day. We're getting more information as we go. Now, beyond compensation, because the Paycheck Protection Program covers and is intended to cover compensation, there are actually a couple of other items that it covers. So mortgage interest, not your entire mortgage, not principal payments, but your mortgage interest it covers. It also covers rent and utilities. Now, the Paycheck Protection Program is really specific in that it covers these things. Any money that is used fraudulently or reported fraudulently as having been used, the federal government really is going to take criminal action. And so that's where the record keeping and analyzing come into play, as we saw from our earlier graphic. That's part of what we specialize in at Mullen & Associates. And so immediately when our leadership team sat down and we started discussing which of these programs was right for our firm in protecting our firm and our employees, when we sat down looking at those options, the first thing, because I'm the one tax advisor in that leadership team, the very first thing I mentioned was we need to escrow the loan money, right? We need an electronic paper trail of where this money is going, and you can pay these expenses out of the operating account and then refund the operating account from the escrowed loan money. And that's really where you protect yourself through that record keeping to make sure that that everything's on the up. Beyond that, I think that's everything that the Paycheck, or most everything that the Paycheck Protection Program covers. The real question, and the important one that we will ask on both programs, is this forgivable? And the answer to that is yes. The Paycheck Protection Program has a forgivable portion to it. Now, that portion can be the entire loan, but it depends on how you use it. So if you use this loan for only the covered items that I mentioned, payroll expenses, mortgage interest, rent, and utilities, if you only use it for that, then it'd be entirely covered. As far as how much of the loan you can qualify for, we would really want to dive into that with you in particular on a one-on-one. But I will just quickly mention that it's about 2.5 times your average monthly payroll. Now, the bill gets pretty specific when it comes to seasonal employers and the like. Of course, at Mullen & Associates, we hire some seasonal staff during this time of year, which is typically our busiest time. And so there's some additional complexities there, which we won't be able to go into today. But the quick kind of loan amount figure that you're looking at is 2.5 times your average monthly payroll. There is a cap of the loan, which is $10 million. It just doesn't go over $10 million. And the last number that I'll leave you with in regards to this is that these numbers are capped on a per employee basis at $100,000 of salary annualized, which means we then have to prorate it based on the period of time that you're actually applying for and qualifying for. So there's some complexity here as far as what you can get and what it covers, and what you have to pay back, if anything. And so at Mullen Associates, we're on top of this. We know our stuff, and so we're happy to work with you in particular on it. If any of you have questions about the Paycheck Protection Program, please go ahead and type them out, include them. We will be going back through and trying to get to every question we can. But for the rest of this, I'm going to go ahead and pass the ball to Ward.
Thank you, Kev. One of the keys, excuse me, in all this is that the system is changing very quickly. Every day, or excuse me, there's new guidelines that come out. And so what we've tried to do is be as current as we can be with this, with the understanding that there will be more clarification probably as time goes by. The key is the EIDL. The EIDL is a low interest loan for up to $2 million, which pays for expenses that could not have been paid, would not have been met had COVID-19 not occurred. So this is not a loan to cover a downturn in the economy. These are specific expenses that because of COVID-19, because of the virus, your company is not able to meet. Now, it's very interesting. The government is very intent on trying to keep the economy going and keeping business afloat, because we know that that's where the future is going to be. The time is going to come when when the virus is going to have been passed, basically, and we don't want, government does not want companies to start from scratch again. So they want to keep these businesses afloat. The SBA will cover loan payments, interest, fees, principal for loans that are taken out within 6 months of the passing date on this. So for the first 6 months that this loan is in effect, you're not going to have to make any payments because the SBA is going to cover those payments for that first 6 months. One of the key things about the EIDL loan is that once you apply for it, there's an automatic, immediate $10,000 amount that will be sent to you if you properly apply for all of this, which will never have to be paid back. So whether you are 490 employees or you're one person working independently, that amount is available to you. And it's very important that this be applied for properly, because that $10,000 right now can be a tremendous impact in the viability of your company. EIDL is available to small businesses as Kevin is the limit on all of these items. So if you're a company of less than 500 people, or you're a sole proprietor, or you're an independent contractor, anybody who falls in those categories can file for the EIDL loan. Now, it is important to realize that there are different applications for the sole proprietors and the independent contractors from the small businesses, and we certainly can help point you in the right direction as far as what application you need to fill out. The EIDL, unlike the PPP, which is quite closely defined as far as what it will and will not cover and pay for, EIDL is very, very open. It can cover some payroll if it's properly taken care of. It can cover accounts payable. It can cover fixed debts. It can cover supplies and fixtures. It can cover almost anything that is caused by the COVID-19. So again, it can't cover a downturn in the economy, but if there are expenses and needs that you have that have come about because of the impact of COVID-19, EIDL is designed to take care of those type of expenses. Now, the interest rate on the EIDL is a fixed 3.75%, and it can be paid back over a period of up to 30 years. The amount and the period will define that. I don't know if I mentioned, but the maximum EIDL that you can get is $2 million. And that will be based on your needs and your situation. As Kevin had mentioned, the PPP is forgivable. EIDL is not. EIDL is a defined loan amount which will need to be paid back over the defined period. Now, the first 6 months, as I mentioned, you don't have to worry about making payments because the SBA is going to take care of that for those first 6 months while you get firmly on your feet. The SBA is going to look at credit history, repayment potential, and eligibility to determine who gets what, who does not get what, and how much that you're going to get. In filing for your EIDL, one of the important things is if it's a collateralized loan, the SBA is going to be much more receptive to the application that you send in. In fact, the SBA has said that the maximum unsecured loan that they will give out is $25,000. So if you have anything that collateralizes the loan, it certainly increases the potential loan that you can receive. Kind of touching on the comparison of the two, the PPP and the EIDL, they can't both cover the same items. So if you get a PPP loan and it covers payroll up through June 30th, EIDL can cover payroll past that period of time, and it can cover all the other items that we mentioned, but they can't both, you can't double dip. You can't cover the same items in both of these appropriations. Again, there's a tremendous amount of information relating to EIDL. When we filled out ours, we spent basically 2 days filling ours out. Now it has become more streamlined since then, and so it's not going to be as all-encompassing as the initial demands were. But this is a loan that everybody who has any need and any repercussions from the COVID-19 needs to take a very serious look at, because the government is very willing and very desirous in making sure that our economy and our businesses stay afloat.
Yeah. So one of the things that is worth mentioning here is that the EIDL loan is a loan from the SBA in particular. The PPP loans are actually being done through individual banks. The PPP application is pretty limited. It's not a lengthy application. And so we'll learn more as we go, but wanted to make sure we pointed out those differences here when we're discussing the kind of the pros and the cons between the two. So hopefully some of the numbers that we share give you an idea of, depending on your specific circumstances, what you would need and what would benefit you. Let's go ahead. Oh,
I was going to emphasize what Kevin just said. Each individual is in a unique situation, and a one-size-fits-all explanation is not really our intent at this point. Our intent is to give you enough information that you can look at your situation and determine what specific questions you might have that we could then answer for you or help you find answers to.
Okay. So we will dive into specific questions here in a minute, but first let's go ahead and we've got a slide here that actually shows some of the differences between the EIDL and the PPP. And so again, if you'd like a copy of the presentation today, we'd be happy to email that over to you. There's some useful information there. Let's go ahead and move on to the stimulus package here. Okay. So now we start getting into the income tax realm, which is where Ward and I have made our careers in primarily doing. So now we're going to I'm going to nerd out a little bit on you going through some numbers here. Okay. So the question is, who gets the stimulus check? The reality is the information that you may have had access to already. I want you to shed some of that information, just toss it out of your mind, because I'm going to give you some actionable information here. First and foremost, it depends on your filing status, whether you are single or married filing separate, head of household, or married filing joint. So for single filers, the income threshold begins at $75,000. By $98,000, the stimulus is phased out entirely. Okay. For married filing joint filers, that is doubled. So it's $150,000 to, it's 75 to one, for single filers, it's 75,000 to 99,000. For married filing joint, it's 150 to 198. Okay. So those are the ranges of basically who would get it. If your adjusted gross income as a single filer is less than 75,000, you will get all of the stimulus credit. If you are one person, just one adult earning less than $75,000 a year, it's $1,200. If you have a spouse, then that's another $1,200. And for each child under the age of 17, it is $500 each. Okay. Now, I specify under 17 because if you have children over the age of 17 or older, who you have claimed on your tax return, there will be no credit. Now, if they filed their own tax return and they are 17 or older, meaning you did not claim them, but they claimed themselves, then they would also receive the same $1,200 that an adult would receive. Okay, so that's kind of the who qualifies for it and how much will you get. The one thing, I will blend these two subjects here for a second because I'm going to specifically speak to the phase out ranges. So from 75,000 to 99,000, I used as an example. At $99,000 of adjusted gross income, you would qualify for exactly $0 as a single filer. However, from 75,000 to 99,000, you would receive a prorated reduced amount. Okay, this proration affects the adults and the kids. It affects everyone's portion of the credit. Okay, so it really just depends on how much you make. Now, again, on the married filing joint side of things, it's 150 to 198, and so at a dual working household earning $190,000 a year with 3 children, you would get something. Now, a lot of it's going to be phased out, but you will get something. Okay. When we talk about adjusted gross income, there are certain things that come off the top of your adjusted gross income to determine. It's not about how much you make, it's about what your AGI is, adjusted gross income. So, health insurance premiums, retirement contributions, business-related expenses. So for you business owners who have an S corporation, that S corporation's income is not reported by you individually, it's reported by the business. It then passes through the profit of the S corporation to your individual return. So that means if the profit on the company is $50,000, but your revenue was $2 million, we show $50,000 of adjusted gross income on your personal return. Okay?
I guess one of the things normally when we're talking with you, we're talking to you about your taxable income, and there is a definite difference between your taxable income and your adjusted gross income. So if you go back to your tax return to try and determine where you are, just be aware that your taxable income is where your tax obligation is calculated from. Your adjusted gross income is going to be a higher number. So as you look, be sure you recognize those two numbers.
Yep, thanks. Now, the question becomes, how does the Treasury Department determine who qualifies? Okay, because it's not just us telling them, hey, my clients qualify. This is them actually getting access to electronic information that they already have to determine who qualifies. In the absence of a 2019 filed return, they will be using the 2018 tax return information. If they have access to 2019's information, then they'll use that instead. The reality is this credit is a prepayment of a future applied credit, meaning on the 2020 tax return, this credit's going to get reconciled. So if you qualify for $2,400 now, then they will send you that $2,400 now. But then if when filing the 2020 tax return, we determine that you actually qualified for more, then you will receive the remaining amount that you ought to have received at that point. Or conversely, if you ought to have received less, then they will tax you that difference. So it'll be reconciled on your 2020 tax return. Okay. The next piece here is it taxable? No, this is not a taxable income. This is not a credit that is taxable. Okay. The next piece I want to cover is how you will receive it. because they're really working hard to try and not mail out millions and millions of checks. They're really trying to figure out how they can accurately direct deposit this money into your bank account. So the way this happens the easiest is if you have recently filed your 2019 tax return and you received a refund, and that refund was direct deposited into your bank account, then they will direct deposit it into that account. On the flip side, if you owed money and you elected to have them directly debit the money from your bank account on your 2019 tax return, which, side note, I generally always recommend, then it would be direct deposited into that account. In the absence of that information on your 2019 tax return, they'll go back to 2018, which is not really great. It's not ideal. Now, your bank account may not have changed. And if it hasn't, then good, you're in business, no problem. But if it has changed since 2018 and you had no reason to provide the federal government with your direct deposit information on the 2019 tax return, or you haven't filed 2019 yet, then there may be some issues. So let us help you, guide you through that.
One of the keys too, in what Kevin is saying, if you heard correctly, is they're going to look at tax returns that have been filed. There are a tremendous number of people in the country who don't have to file tax returns because they don't have enough taxable income to require a filing of a tax return. Well, in this situation, we still need to file tax returns. Tax returns for you still need to be filed to ensure the IRS is very aware of you. They're aware of where you are as far as sending the stimulus check to you, et cetera. So if you're just on Social Security or whatever your situation might be, that you didn't have to file a tax return for 2018 or 2019, we strongly recommend that you now file one. It's a very simple process to get one filed so the IRS can make sure that you do get your stimulus check.
Now, regarding the, and thank you, Ward, for mentioning that, but regarding the actual payments that you're going to receive, there's a first wave that's going to come out here, we think soon-ish, right? Now, it's the federal government, so I can't tell you exactly when, but it could be in the next week or 2 or 4. However, if you don't receive the stimulus payment during that first period because you haven't filed 2019 and 2018, shame on you. But we can help you. We'd love to help you. Our job at Mullen Associates is to solve tax headaches and build financial vision. But if you have not filed either of those tax returns upon filing, it could be 3 months from now, they will then issue you your stimulus check. It's not something that we can show them on the tax return, but at least at this point, they may go that route. I don't know. Again, it's changing every day. But as of right now, they would then send you the stimulus check. So it's going to be, the federal government will be reactionary after their proactive measures are taken into effect. Okay. I think that covers the stimulus check in total. If you guys have more questions, please, again, include them, and happy to go over them.
The calculator, that's going to be in the package they're getting sent?
Yeah, so we have a calculator online so that you can actually show your information. So you can show how many dependent children you have under the age of 17, what your filing status is, and how much your adjusted gross income is. The reality is we would love to help you do that. We're going to give you the resource, and so you can just do it yourself. But we would love to help you do that, even if it's just a quick 3, 4, 5-minute conversation. You send us a copy of your previous year's tax return if we didn't complete it. If we did, then we have that information easily accessible. And then we can run the calculator for you and give you an idea. It's not perfect. We don't know for 100% certainty, but based on the information that we have, we're pretty confident that we can get you in the ballpark of how much you receive.
Good.
Okay. So I think we're at the point now that we want to go through the Q&A portion of our discussion. So if we want to go ahead and move on.
So I'll go ahead and read you a couple questions that came out. Can you guys hear me?
Can you guys hear Clark?
Okay. Then I'm just going to read you a few of the questions that came up through the chat. Yes, you can email in questions after this if you have any of our emails.
Real quick, while he's picking which questions to ask, I will go ahead and just verbally tell you my email address and Ward's email address. Mine is kevin@mollentax.com. Really difficult email here. And Ward's is just about as difficult. His is ward@molintax.com.
We are highly imaginative.
And we'd be happy to field your questions.
So we'll kind of start from the beginning. I just wrote down all the questions that I saw in the chat. So the first one was, if I'm outside of Houston and I'm looking to do the PPP, do I need to get a CPA to help me with that? Or what should I do? If I live outside of Houston, what's the next step?
Yeah, so generally the application is actually not complicated. I've looked at it myself. I went through it. It's not super complicated. If you'd like some just advice over the phone, we'd be happy to give you some quick pointers. If you're the in-person handshake type, I don't recommend shaking hands right about now, but if that's what you prefer, then you certainly can look for assistance in your area. But as we're already developing a relationship with you, we'd be happy to work with you in particular. It really, again, it's not super in-depth or super complicated.
Okay, next question. I'm a peace officer working extra jobs. Would I qualify for the PPP?
Yeah, the quick answer to your question is yes, you would qualify. There are some limitations. Again, it's based on 2.5 times your average monthly payroll expense. And so in this case, based on your income as an independent contractor, you would qualify for, based on that economic damage, if you will, you would qualify for being able to submit that through a bank.
Okay, thank you. Next question is, do I need an EIN to qualify for the EIDL?
No, you don't.
Yes.
You need your social security number, and an EIN is proof of being in business, but your social security number for a sole proprietor or for an independent contractor is sufficient.
Okay, next question is, what is the period of time for the PPP?
It's
So
February 15th.
yeah, there's a covered
Yeah.
there's a covered period that the bill specifically stipulates, which is February the 15th through June the 30th of this year. Okay, so that's the covered period, is the kind of the legalese in the bill itself.
Okay. Which banks are currently doing PPP? How do I know where to go to?
Yeah, so I don't have a list for you right this minute. They are consistently trying to get more and more lenders available to be able to do these. Clark, I imagine we may have 1 or 2 contacts that we can probably provide.
In fact, the SBA suggested that whether it's a bank, a credit union, a savings and loan, almost any organization can qualify for this. Although you certainly would want to make sure that they have qualified to take care of these.
Yeah, so that's a follow-up point that we'd be happy to get you some specific information.
If I was a new business starting in February of this year, would I qualify?
Quick answer is yes. Yep. If you've had economic damage due to, on the payroll protection program, the answer to that is yes. I'll defer to Ward on the EIDL, whether that still applies.
There is you had to be in existence, if I remember right, on February 1st to qualify. If you'll send me that question, I will get an absolute specific answer for you. But if I remember right, you had to be in existence on February 1st to qualify.
With the stimulus checks, is it okay to file 2018 delayed?
I mean, the quick answer is yes. Have you filed 2019? Because 2019. Well, sorry, I don't want to ask you a personal question in a public environment like this, but you really ought to file. The quicker you file, the faster you will receive the stimulus check. The reality is if you have not yet filed 2018, you really should work with someone like us, because what can happen is your adjusted gross income for 2018 can be higher than 2019. And if they process 18 first, they may send you a reduced amount. And so working with someone like us, remember, on the forecasting side, the analyzing side, we will look at those numbers to make sure that you leverage getting the most that you can from the stimulus check. Okay. And so you may be in a unique position to opt not to file 18 and deliberately file 19 so that you get more of the stimulus check. And then once we receive that check, then we file 18 because they're only basing information off of 2018 in the absence of 2019's tax return. If you've got 2019 on file, it's what they will use no matter how much income you had in 2018. In that same way, I have clients now who have opted not to file the 2019 tax return. I'm going to go a little bit on a tangent here, but I think it's valuable for some of you to know. I have some of my clients who are deliberately not filing their 2019 tax return. We have everything. We're ready to go, but we're waiting for those stimulus checks to come through because on 18, they will qualify for either a larger or full portion of the credit as opposed to 19 when their income increased or they had fewer dependents where they would receive less. Now, remember what I told you about the reconciling that will occur on the 2020 tax return, because I've warned every single one of my clients who are in this position that they may qualify for more now, but they're going to eventually have to pay it back come tax time next year. No problem. Interest-free loan. That no problem at all. You know, they may end up having to owe next year and they'll pay that money back at that point. But ideally in this case, you know, we're all hurting a little bit and need to make sure that we're bringing in the income that we can.
In fact, that is the intent, is to get the money out just as quickly as they possibly can because they know people are hurting. And they would much rather give you too much right now, get it back later. So don't, you know, we want the very best situation, as the government does, for each one of you economically right now.
Okay, next question.
Yes. So if I'm looking to do a SBA 7A loan, how do I access that application?
You go to the SBA website, and I'm sorry, I don't have the website specifically with me. If you'll email me, I will email it right back to you.
It looks like it's sba.gov is where you're able to access that information.
And then on that website, you'll find the application link.
So the next question is, I am a sole proprietor S Corp. Would the PPP still qualify? So I'm the only employee of this S Corp.
Yes, absolutely. Again, based on the limitations that we've already discussed, but the answer to your question is yes, you would qualify as a sole proprietor.
And part two of that question, if I'm that sole proprietor, where does the credit check go? This might be a little outside your realm, but is it going to hit the individual or the business when they run that credit?
Yeah, I don't have the answer to that question. That really, I would highly recommend you discuss that with a lender. Remember, the PPP is through a lender in particular. And so we want to make sure that we stay in our bag and don't want to violate any FDIC rules or anything like that. So we'll go ahead and leave that to those professionals. But you talk to a lender specifically and they should be able to advise you.
So this question just came up, but it's somewhat related. The question is there a benefit in applying for one of the loans via bank compared to directly filing at the SBA website?
Well, so they're filed in different places, right? So it's not a choose your own adventure book, right? We're saying SBA loan for EIDL. It's through the SBA that the EIDL loan is applied for, and the Paycheck Protection Program must be applied for through a lender. So you can't go through the SBA if you want the PPP loan.
What if I decide not to use all of the PPP payment?
So if you don't have enough expenses to cover it, I guess that's what they're asking.
Well, so let me take this one, Ward, because there are no prepayment penalties, none. So if you determine that there's a portion of this that you really can't qualify for, but obviously at the expert advice of Mullen & Associates have decided not to commit fraud, then you can prepay the loan with the principal that you already have. There's no prepayment penalties.
One of the keys here too is that the stuff that is properly used is going to be forgiven on the PPP. So if it's not follow the guidelines to be forgiven, you just have to pay it back.
Yep. And there is an interest rate. It cannot exceed 4% fixed. Okay.
Do you have to pay back the PPP funds at the end of the 2020 year? When does that?
I believe it's a 2-year window that you have to pay back the PPP loan if, again, it's not forgiven, if it's not used for a covered cost. I believe you have a 2-year window to pay that back. I think the payments don't even start until 6 months in.
Right.
So you have 6 months to even begin making any payments whatsoever.
With the PPP application, is it required that you give all estimated expenses through June?
I don't know the answer to that. I'm not sure what the lenders would require. That's not written in the bill that you're required to provide those expenses.
I think the key is probably that you come up with your best estimate at this point, and then again, you'd have to prove the stuff that's going to be forgivable, and the items that you cannot substantiate, they would have to be paid back.
Yeah, and let me just tell you, I'm gonna quote you an excerpt from the bill itself. It says because basically you need a certification, and the application shows that kind of that certification, and it's going to give you this language. But it says the uncertainty of current economic conditions makes necessary the loan request to support. Basically to support the business and the economic endeavor. And so that's really what they're banking on, is you certifying that this is necessary in order to support your employees. Actually, I'm gonna sidetrack just a little bit here based on that question. For the PPP, if you reduce the amount of employees that you had when you applied, you have to pay that money back. And so the whole point here is the federal government wants to kind of foot the bill for your employees during this window of time. And so if you take that money and say, hey, this is now mine, and I'm going to put that directly in my pocket by letting go of some of my employees, the federal government says, not so, we're going to take that money back. So you have to actually maintain the number of employees that you used in the application. The bill does create a window for you to be able to furlough or let go of employees for a brief window before bringing them back on, because some of us had to make some difficult decisions during that period of time. So just keep that in mind.
I think one of the keys here is the government is going to support people either through unemployment or through the PPP. And they would much rather that people continue to be, at least my perspective, this is not fact. My perspective is they would much rather people continue to be employed and are employed when we come out on the other end than have to go through unemployment and then have to start looking for a job when things turn.
What are considered coverable costs by the PPP?
Okay, so we went over those. I will go over them a little bit again. I'm not going to go as in depth, but but if you want to copy the presentation, of course, we can get that for you. But primarily what it covers is payroll costs. Okay, so that's the actual verbiage in the bill itself, is payroll costs. Now, payroll costs spin into 5, 6, 7 other things. Basically, salaries, commissions, tips, that type of the earnings. It then covers state and local tax that are assessed on compensation paid by the employer. It also covers self-employed and independent contracting folks who have net earnings and salary and wages and tips, etc. It is capped at $100,000 of annualized revenue per employee. I say annualized because this only covers a period of time, right? The covered period is February the 15th through June the 30th. And so you take an employee's wages at $100,000 a year and prorate that over that period of time. It's about $37,500 if I remember right, that is potentially max covered per employee. And so there are some limitations there. Beyond that, mortgage interest, not principal payments, but mortgage interest, not insurance, interest, rent, and utilities. The total loan is capped at $10 million. Okay, so if that answers your question.
To address another comment, this presentation will be made available. We will send it to you at the end. As for the next question, there is a police officer working extra jobs, and due to those extra jobs being canceled, will that qualify for either the EIDL or the PPP?
It would qualify for the PPP.
You know, qualify for EIDL because this is a downturn because of the virus and not because of a downturn in the economy.
Yeah, economic injury disaster loan. You have definitely experienced economic injury due to those extra jobs being canceled. As per everything else we've said so far, for a one-on-one, we're happy to do that and give you that kind of consultative advice. but you need to reach out to us so that we can kind of help you figure out exactly how much.
Specifics it's a little hard to do a generality, as
Yep.
Kevin was saying,
Yep.
when we can answer specifics very easily.
Will there be a cap on the idle funds?
$2 million is the cap on the idle funds.
I think that question, if that, and tell me if I'm wrong, but I think that is actually a different question. So the PPP has $340 billion allocated in funding. So does the idle have a cap in federal
does.
funding? Do you know what that cap is?
Um,
I think that may have been the question. You tell me if I'm wrong.
I don't remember.
Okay.
I've looked at too many numbers. I don't remember exactly.
No problem. We can get you that. If that really is your question, we can get you that. Just let us know.
And they do suggest that you file as soon as you possibly can, in case there is a point where it runs out. You do want to be on the plus side versus the negative side.
Yeah, you got to do it quick.
So I've heard that the PPP applications open tomorrow. Will there be a list of lenders ready to make sure people know where to go?
Yeah, I assume that that's the case. Clark, I don't know if you've got a list of lenders. I think we had that conversation a day or two ago. But yeah, now it's important to note that it opens tomorrow, but not for independent contractors. The PPP opens on April the 10th for independent contractors. So when we talk about some of our awesome law enforcement professionals who are working security extra jobs, you are an independent contractor in that case. And so that wouldn't open on April the 3rd. That would open on April the 10th.
Okay, jumping over to the stimulus checks real quick. We have a couple questions there. For what is the single head of household AGI amount? What is that phase out limit?
For single, it begins at 75,000, ends at 99,000. I actually don't have the head of household numbers off the top of my head. I think it was 113. I thought there was a difference.
Maybe.
I think, don't hold me to this. I think it's like 113, but I can get you that number absolutely. If you're a head of household filer, meaning you have a qualifying dependent but not a spouse, then or legal spouse, right? Then you may file as head of household, and I can get you that number. But for single, it's 75,000 is where up to 75,000 you would qualify for 100% of that stimulus check, depending on how many dependents you have and all that kind of stuff. But beginning at 75,000 and $1, you start the phase out range, and so it would phase out a small amount of the credit as we go. And so by $99,000, you would not qualify for the stimulus credit or the stimulus check at all, no matter how many dependents you have. You could have 9 kids. My wonderful sister has 8 beautiful children, and she's an awesome mom. But if their income exceeds the limitation, they would get nothing. And so it really is factored in already. It's all baked in. 75,000 to 99,000 for single filers. Married filing joint is double that, so 150 to 198. Okay.
So kind of going along the same vein as the single filing head of household, what happens with the college student? Do they qualify as that $500 extra bonus check, or is it just dependents under 17?
Yeah, so I'm gonna hit you with some math for a second here. Don't let your eyes glaze over. Okay, what we've got is what does that child benefit you on your tax return? They give you a $500 other dependent credit. Okay, so that's what you get for claiming them on your tax return.
Except for the college credit too.
Well, college credit, I hear you. That's a little different. Okay, but now when we talk about the stimulus check, which is $500 per dependent under the age of 17. So your college student would not qualify for that $500 stimulus credit. Okay, you get $500 for claiming them as a dependent, but you wouldn't get the stimulus credit. Now, what if you don't claim them at all? So you don't get that $500 other dependent credit. You would also, as Ward mentioned, miss out on the college expenses. Okay, I'm sorry, those college credits can be up to $2,500. Hugely valuable on your personal return if you are fully supporting your college student. But let's say for a moment that your college student is fully supporting themselves, and you don't claim them on your tax return. Well, then you wouldn't get the $500 credit. But if they claim themselves as an adult, they could qualify for their own $1,200 credit, like you also as an adult would qualify for. So I hope that clearly answers your question.
We're getting pretty low on time. We've only got about 5 minutes left, so we're just going to take a few more questions. are there any parts of the EIDL that are forgivable?
No, not at all. Now, the $10,000 that you make that you can get up front, you never have to pay back. But the loan itself is not forgivable.
So a small portion of it, then it sounds like, kind of is forgivable. Now, my understanding is that takes away from the $2 million cap, right?
No,
It doesn't.
it doesn't.
Wow. Okay. Fantastic. Okay. Do we have another question, Clark?
That's all I have written down. If I missed any of your questions, please let us know. Reminder, you can send those to us via email. And we got a couple more coming in.
Oh, maybe.
Oh.
Oh, wow. Okay. We got a big question there. Let's see if we can't tackle one or two more questions here before we wrap up.
I'm just going to read this one straight through. The certificate of reservation of entity name is dated 1/2020, but the registration of business with the Texas Secretary of State dated February 14th, 20, EIN assigned 2/6/20. COVID has slowed down the submission of documentation necessary to different facilities for the completion of setup to conduct business, and due to elect surgeries and no longer being done, it has impacted the business. As we provide surgical assistance for mostly these types of surgeries, can we still take advantage of the CARES Act?
I would think the key here is, when did the business begin, not when it was registered with the state. Because whether you're an LLC, a sole proprietor, a partnership, whatever it might be, if the business began prior to, I think it's 2/1/20, you'd be okay.
Yeah, so remember that sole proprietors and independent contractors qualify here. And so even if you were operating the business, not registered through the state, but still operating the business, generating revenue, incurring expenses, having any employees, that a lot of this still would apply.
Okay, and this will be the last question for today. What is the average anticipated forgivable portion of the loan? For example, if we get $500,000 disregarding the interest, what should we expect to pay back of that amount?
Yeah, it really is up to you, right? So for the PPP in particular, it depends on what you use the funds for. If you receive $500,000 and you use $500,000 in covered expenses, then all of that would be forgivable. Again, excluding interest, all of it would be forgivable at that point.
Right. We appreciate your listening to us. We really want to be as much help as we possibly can to you as we work through these issues. Please don't hesitate to contact us, whether it's by email, phone call, whatever is the easiest way for you to communicate with us. We would be more than happy to do everything we possibly can to answer your questions and ensure that you as a business are as viable as you possibly can be.
Yeah, thank you, Ward. And you should really take that to heart, coming from someone who he and my mother, Crystal Mullen, started Mullen Associates about 40 years ago in the greater Houston area. Our very first client is still our client to this day. That should tell you a little bit about who we are and how we operate. We would love to work with you. And if you are one of our current clients, we so appreciate your continued business and your patience during this window of time in which our office is closed. Our phones are on. We are answering emails. Most of our employees are working remotely. Ward and I promise, will be washing our hands after this and
Yes.
making sure that we keep up with social distancing after we finish here.
We can't be 6 feet apart at this point, or the camera wouldn't view us. But other than that, we're doing a good job.
Yes. So thank you, everyone, for joining us, and we really wish you safety and health during this difficult time. Let us know how we can help.